Hello and welcome to another update video about GALA. First of all, maybe a quick look at the bigger picture. Obviously, you might be aware of it that this chart rallied only in a three-wave move into the March highs. And many coins formed actually a five-wave move into this high. And yeah, I mean, GALA didn't, okay? And you just can't count that as a five-wave move. There is no way. So it is clearly a corrective rally. So again, I can just repeat what I said in previous videos. This is not a great chart. I know it's a popular chart. It's a popular coin. Therefore, I do cover it. And also because we can recognize the waves quite well. So it makes sense to cover it. But it is not necessarily a bullish chart. Nevertheless, as long as we are in a bull market, we can give the bulls the benefit of the doubt despite the corrective rally. Bear in mind that corrective rallies can always turn into larger corrective rallies. So my thesis here on this chart, and I go to the 8-hour chart now, is that after a five-wave move down, bottomed in October last year, this first wave up was just the A wave, okay, of a wave 2. Just the A wave. So wave 1 to the downside bottomed in October last year at, where were we, 1.2, 1.3 cents. So, and then from there we had a first rally in wave A, dipped in wave B, and we rallied again in wave C. I mean, you can, if you want to, you can call that an impulse. It's just difficult to read these microstructures when we're dealing with altcoins, especially when the bigger picture isn't clearly bullish. Then you get lots of messy microstructures there. And it's not necessarily easy to really identify and read, basically those microstructures. Yeah. Anyway, we then saw a move down, which I can also call a three-wave move. We had an initial A wave down, B wave probably as a triangle, and then the C wave down. So it is a three-wave move down after a three-wave move up. And we're holding the 78.6 FIB level here at 1.9 cents. Below that, we still have 1.588 cents as next support. And from here, we could rally in the next move up, which would be wave C. Because a larger A wave followed by a larger B wave would lead to a larger C wave. As an alternative interpretation, we already topped in the entire wave 2. This will become more probable if the price forms one more low. Why is that? Well, the reason is that any break below the 78.6 retracement level will likely lead to new lows. It's just, completely new lows, because any sustained break below that level typically indicates a lot of weakness. So normally I call for any pullback the 78.6 retracement like the last reliable bullish support. Now here we have a special situation on this chart. The situation is that we're not dealing with a 1-2 structure. We're dealing with an AB, and we know that B waves can retrace more than wave 2s, for example. B waves can sometimes even overshoot, even though in this scenario I would call that invalidation. But yeah, just be aware that we could easily form another low and still rally. What we need as an indication that we've bottomed is a five-wave move and ideally a break above the corrective price channel's upper boundary line. So if we go to the 4-hour chart again, then you can see what we need to see for a five-wave move up. And that would be 5 waves to 2.7 cents, 2.75 basically. Hasn't happened yet. Hasn't happened. And the problem is this move down, even though it's only in 3 waves, this move down on, did that bottom yesterday, yeah. It briefly broke the 61.8 FIB level at 2.2 cents. Now I can still call that a fourth wave. It's not a sustained break below support, and it would only be a diagonal pattern to the upside anyway. And in diagonal patterns, the invalidation point for wave 4 is the low of the wave 2, so 1.98 cents. We didn't get there, but still let's say it challenges this scenario even more. Don't get me wrong, this is not a great chart anyway, and in the short term it's also not very clear. But we have 3 waves up, yeah. The third wave reached the 1.38 extension. So what I was watching for was a fourth wave, and ideally a fourth wave that doesn't break below 2.2 cents. Well, it did break below it, but it didn't sustain there. So I would give it still a chance to form 5 waves. If it rallies now to 2.75 cents or 2.85, yeah, I call that a fifth wave. But be on the side of caution. This is not clearly bullish until we get all 5 waves completed. When we get the 5 waves completed, then the next pullback should be a wave 2 and hold a higher low. This here is at the moment very, very corrective looking. I mean, it's just rallied in 3 waves, so it's very, I would say, very, very difficult to really identify what it is. It is a 3-wave move up anyway. It's not 5. Yeah, it's at least not clearly 5, unless you call it 5 waves like this. But that is extremely questionable because the 5th wave didn't even reach the 1.618 extension. But we want to give the bulls the benefit of the doubt. And I'd say if the last low is holding, I'm watching for higher. But any break here below the Thursday low, which formed at 2.15 cents, will likely lead to a test of the 1.588 cent level. Bottom line is we don't have a clear reversal signal. Let's see if we can get 5 waves, and if a break above the upper boundary line of the trend channel occurs, then we might have our low formed. But if we get 5 waves and 3 waves down, we have the next setup as well. This is the support area anyway, where we are watching for reversal. That's the update about GALA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.